Welcome back to Barry Charles. In this episode, we're going to talk about Adobe. Yes, the systems that they use are absolutely fantastic, whether it's for your Photoshop, whether it's for making YouTube thumbnails, everything in between. Adobe is here for you, and it has been a money-making machine for quite a while. Can they continue it? Is this a company you should look at investing into? Well, we're here to help you. We're here to give you the stock analysis on Adobe, which will look at the financials from revenue, net profit, earnings per share, PE ratio, free cash flow, long-term debt, return on invested capital, and many other things. And if you stay right to the end of the video, folks, I will give you the intrinsic value of this company potentially for you, so you can do more research to look at maybe this is a stock to invest into. Not financial advice. Invest at your own risk. Absolutely do your own research. Is what you need to do before you invest into any stock. Adobe, yes. What is Adobe an investing opportunity? Well, we need to understand what's happening with the revenue and all that in between. Let's do this right now on the channel. Welcome back, guys and gals, to the channel. We're going to do Adobe stock analysis, and we're going to start off with the sweet revenue. Yes, the revenue in 2022 was around 17.6 billion. It's gone up to 19.4 billion. Lovely, great start. Net profit is up 4.7 billion in 2022 to 5.4 billion in 2023. So okay, two good starts, very good. Earnings per share 17.92. That's very good as well. And PE ratio, there is expected some growth to come at 35 of PE ratio. It's a very high PE ratio, folks. If we look at the 52-week range, you got $318 to $638. So you're very much at the higher limit right here, right now. So there's a lot of people excited about Adobe at the moment. Does that mean you invest into a company because everyone else is excited? No. Sometimes it can be, but most of the time you will see a downfall at some point, and that's when you look to invest if you're looking to start investing into Adobe. No dividend yield, nothing to write home around here. The last year has been good at 61%, and over the last 5 years, 149%. So absolutely been a great stock for you over the last 5 years, being in the market. So if you've been in this company, it's a company that's potential for you to continue to invest into or look to invest into. There's no red flags at this stage. Short interest, 1.2%, so nobody's worried about them cutting. Market cap, 283 billion. Do you see a 4x to $1 trillion? Potentially. Potentially. They've got a lot of work to do to get there, though. So you're looking from here, they need to go to 72 billion at least. That's just in revenue, and likes, and their profit's going to do the same to justify going up to those sort of levels. So that's where you got to. That's where you got to make the big bucks to find these companies that are going to do that. So Adobe's trajectory is looking potentially could go that way, but how quick it gets there, it could be waiting a long time. Total assets 27 billion up to 29 billion, so going good there. And the total liabilities been pretty much similar, 13.1 billion and 13.2 billion, with the long-term debt of 3.6 billion, be pretty standard for last year, compared to beautiful, but it's dropped. Free cash flow of 7.3 billion to 5.3 billion. So if they want, they could pay all their debt off at once. So that is very good to have that up your arsenal if you need to. Shares outstanding, 452 million. They have been doing share buybacks for a while, so very good in terms of that. And their return on invested capital is very nice at 21%. So every dollar invested by you, they are making you $1.21, an extra 21 cents for every dollar you put in. So that's very good. If they can continue to do that, this is a company you can look. So I've looked at all the metrics, the main metrics here, folks. There's nothing stopping you buying Adobe. Not financial advice. I'm not currently invested in this company. and with the price to pay to get into it, it's probably too high. But it's a potential buy. Not financial advice. Do your own research before you invest into any company. But if you're looking for a long-term play, nice and safe, this would be a potential company for you. Let's have a look at the intrinsic value of Adobe. Obviously, the bear and bull cases around this is, can they continue to grow their business and use their systems? If it becomes obsolete, that's where Adobe can go downhill. But they have a lot of different ways they use the business. I can't see that happening. But yes, let's have a look at the intrinsic value potentially of Adobe. We're looking at current share price, earnings per share, growth rate, the bond yield, using which gives you an intrinsic value. I'm using Trade Brains Graham's calculator. You can find this online and use it yourself, nice and easy. It just gives you a basic intrinsic value of the company. But you got to do more research after that to figure out if that is the actual intrinsic value, or you need to put the price up or drop it depending on your own metrics. But anyway, we're here to do it for you, so let's look at it. At $630 currently, roughly, the share price at 17.92. Regardless what the current share price is, you're still going to get intrinsic value here. The growth rate of 5, and the current bond yield, the intrinsic value of this company right here, right now, is $345 on a 5% growth rate. The 10% growth rate is probably roughly where they are right now at the current earnings per share. You're paying a little bit of a premium. It's at $532. The intrinsic value compared to where the stock price is. So if you got it at 318 in the last 52 weeks, that was the best time to buy. Definitely, obviously, but definitely that was a great time to buy it, to get close, pretty much a double up. So that's where you need to invest in Adobe when it dropped that low. Earnings per share jumps up to 26 with still a 10% growth rate. Then you're starting to make some money at $772. And then if you think the earnings per share is going to double from here to 36 with a 15% growth rate, then the stock is $14.45. So that's where you're looking. That's where you're going to be looking. The horizon. As I said, as the stock, this is probably where the stock's the only place where it holds. Me going, oh yes. If you're looking at that growth rate of 15%, they're doubling the earnings per share. They're going to do that. I don't know about that, but if you're looking at the growth rate, probably if you jump the growth rate up to 20% each year, share price matters for Adobe. If you got it at 300, I think you have no problem. Anything in the early 300s to 350, I think is sweet with Adobe to make it decent there. If you invest at current prices between $500 and $700, say per se, you'll probably make money, but it's gonna be a long haul for you to really see that money come up, because it's not going to be that company that's just going to go boom, 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 boom and fly to the top. But it'll be a solid grind up. But sometimes when this 52-week range, you can get the stock at a good price. You got to buy it at that price. That's what I keep telling people. Have money on the sidelines at any time. You might not have all the money you want to invest into the stock, but if you at least put in some sort of investment in a stock you really love that you think potentially can be multi-bagger for you, or decent, so you know you're going to make money off this company, you need to have money ready to sit. Don't go all in. Don't care what anyone says. Do not go all in on the stock market. Have money ready to put in when the stock drops big time, because you will be in a stock that drops big time. There's nothing wrong with the financials. It's just bad news around the company. Something happens in the media. Regardless, you can buy into the stock. So Adobe, to me, I'm from a lot of stocks I've seen, this is very safe stock. They could just pay their long-term debt down, but everything else is pretty much in line, apart from the share price, in my opinion, is too high in terms of you want to make money in the stock. If it drops again, I would buy. But yeah, to me, it looks like a pretty safe investment, but it's a lot of money to get into. I think there's probably better opportunities for you out there. But if you're looking for a safe, solid stock, Adobe is definitely a stock for you. Definitely, I think you're highly unlikely to lose money on Adobe, even if you spend the price right now. But I always like to get investments at a better value. So always wait for the dip. That's what I say. You might not get the lowest of all, but if you get it at a price that you think it'll double at least, that's what I say to everyone. Buy stocks that you think at a price that you know is going to double within a certain amount of time. And if it goes higher, well, great. But if you can see 100% at least, obviously you're looking for that multi-bagger. If you think there's a multi-bagger out there, most of the multi-baggers are big risk. Simple as that. Any multi-bagger virtually is big risk at some point. And sometimes you have years to get into it, like Tesla and the likes. But some you don't have enough time and they just go boom. So you just have to be realistic where you see stuff. As I said, you can take risk on a few stocks, have a 5-10% of your company and maybe put it into 10 stocks, whatever you want to do. If you think there's a stock that is out there, there's a potential to go boom. People can lose money that way. So it all depends on what risk you're willing to take. You can stick solid to like companies like Adobe and just keep investing into those sort of companies and you'll make money. But you're probably just going to follow the market. If you want to beat the market, you're going to have to take that risk. Sometimes you'll lose on some of them. But when you get that one that goes ba-boom, then that's when the life changing can happen for anyone in investing. So there's risk involved in any investment. The key is when you realize the stock is gone, boom, regardless of how much you've lost, get out, boom. If you don't believe the company has continued on that growth where you're expecting, and a lot of people would have seen that with Beyond Meat, GoPro in the past, absolute Zoom, all skyrocketed the next minute, boom, they're down the toilet. So that's just some investing advice for you out there. Remember to like and subscribe to the channel. Have a great day out there.